Let's get in Peter McGuire, Chief Executive Officer at XM Australia. Peter, thanks so much for taking out time for us. Could you just start with what's happening in the commodity pack? How are commodity producers, how are commodity markets reacting to, so much news flow coming regarding tariff war day in, day out?
Well, good afternoon. I think a couple of things. First off is that the major concern, the uncertainty with the trade wars. This has been an ongoing saga, as we're all very mindful of, and it's stretching now for a couple of years. Now, there was every chance that you would have seen some form of resolution. That's where the market was anticipating sometime in early parts of 2019. Now they're saying it'll be probably early parts of 2020 or even stretching out from there. So we've been down to this hallway many times together. We haven't got to the altar yet, and they're still waiting for a deal to be actually, put together. So that's where the uncertainty creates volatility and in turn the uneasiness with the market.
So, how should one approach commodity producers at this point of time? Is gold the only space, which gets some visibility versus others?
Well, I mean, when you're looking at the price of gold, it's been a whipsawing the market over the last matter of months also. We've seen, some quite strong moves to the upside there, that through 1500, 1530, 40, and now we're back under the 1500 level. Had a little bit of a rally over the last couple of days. And I feel as though that, again, the fabric of the deal of what we're trying to create as far as China and the US creates that sense of uneasiness from a trading perspective. And that's where possibly the gold market and the hedge, or to look at it from a trader's perspective, there's true volatility in that market, and in turn that creates, I think, the attraction. So yes, I would say that the gold market's not a bad market to be a part of at the present.
Peter, of course, there continues to be a lot of flip-flop when it comes to the trade talks. It's not really a given as to what direction this may take. In the event that we are going to see little or no progress on the tariff talks, do you think that base metals are likely to come under further pressure as we move into the last quarter of the current calendar year?
Well, I feel as though, again, it's a day-by-day proposition where we're saying that there's a deal to be struck, and that could put a little bit of an undertone there and create some bullishness in the metals market, in the base metals. But again, traders have been, as I said, down this road a number of times, and the uncertainty to the market is that possibly further structural weakness. So if you're looking at what commodities players to be involved with, miners or naturally the base metals themselves, that really is a speculative bias at the moment. And I feel as though that many traders are looking through that lens to really get a clear understanding of what the market's representing and where they see value. So yes, you may see a little bit further softness over the next matter of weeks leading into the end of 2019.
You also have, not just the trade tensions, but the movement of the dollar, the US dollar, that influences, the movement of precious metals. Do you think that the firm dollar as well is likely to add to more downward pressure?
Well, yes, of course. When you're thinking about the growth of the US economy and what we've experienced over the last couple of years, and now we're seeing, naturally the Fed, are we going to see further rates cuts? And that seems to be very much on the books for 2020. So, yes, you could see a little bit of, again, volatility for that US dollar. I think there's probably, every chance by the end of the year you might be touching that 98.5 to even 99 handle. With a couple of weeks out. It's not unusual over that that end of year rally, a Santa Claus rally for that US dollar to really take a little bit of a more momentum to the upside. So I wouldn't be surprised if that happens. And again, if you see some form of deal struck between China and President Trump, then that could also underpin the non-farm payrolls being released tomorrow. I think will probably be better than October's, and that's going to be a relatively good number. So that could also underpin the value of the US dollar.
Peter, I want to touch upon crude as well, given that we've got the OPEC meet on. What's the likelihood of them going in for further cuts? What's your sense when it comes to crude?
Well, we're sitting at that 1.2 million barrels a day cut, and that I think that'll be probably added to. They're saying that an extra 400,000 barrels will be added to that number to 1.6 million. I'm traditionally in Vienna every December. It's always cold and very snowy, and it's a sort of like the feel of the OPEC meeting is one of always a sense of uncertainty as you go into the meeting. You're not really sure what's going to happen. From the producers' side, is there going to be harmony? You've seen so many different stories over the last matter of years, and you've got also one needs to be considerate of OPEC Plus and the Saudi Aramco float. So I feel as though that they'll probably push for that extra 400,000. That'll be the headline number, 1.6 million. And there's a glut of oil, as we all know, and that's where I think that they'll try and edge prices higher from here. But it's going to be a different world now with naturally the shale producers. So it'll be a tough one, good for consumers, but not great for producers.
All right, Peter, we'll leave it there. Thanks so much for joining us.